Let's kick things off with the broader markets. All the major averages rallying after the Fed indicated it expects to begin tapering of bond buying soon. The Dow and S&P currently on pace for their best days since July the 20th, up more than 1% for each of the major averages, a little bit off the highs, Mike. But I guess today's rebound started early today before the Fed, but it just didn't get derailed by the Fed. And that was really off the back of improved sentiment from China.
Yeah, in fact, really started overnight. I mean, you did see almost a 1% rally in the index futures before the open today. And that was on this news, which I guess the market only tells you what it was really worried about after the fact, because I thought it was pretty easy to see that there would be some kind of backstopping measure in China of Evergrande. But here we go. You got the news item. The market was very oversold. I mean, a tremendous number of stocks down 15, 20%. And the market is now seizing on that. And they managed to have this nice oversold rally with very, very good volume splits. It looks like a very broad rally today. But, you mentioned it's the best day since late July. We're back up to levels in the S&P first reached in late July. So, you can kind of play this either way, that it was just kind of a reflex bounce. It didn't get us back to Friday's close, or we put in a low for the month.
You always say don't trust the first reaction to the Fed. It's usually the opposite direction. It's usually a negative reaction. And then people realize, oh, wait, he was really dovish. Maybe we should be buying the market. I wonder if when this sinks in today, it's a little more like, OK, the tapering is going to start, and then we're going to be talking about interest rate hikes, and maybe it won't be so celebratory.
It's possible. I still think there was not enough incremental change in the stance or the message for us to have some grand reassessment tomorrow morning. But you're absolutely right. That sometimes does sink in. And, as David Zervos was saying, I mean, when you look at the flattening of the yield curve and this idea that a lot of the committee seems to want to get on with things to some degree toward, getting away from easy policies. I don't know. I don't want to outguess what the market's going to do.
I think a lot of them are paying attention to inflation.
For sure.
And the fact that it's lasting longer and coming in higher.
Josh, did you use this almost 5% pullback over the last week that we got from the recent highs as a buying opportunity? Did you top up anything?
Yeah, listen, we do a ton of custom indexing, and we utilize days like Monday for what's called tax loss harvesting, which from a wealth management perspective is like one of the highest value add tasks we could carry out. And the reason why that's so important is because one of the things that we're always reminding clients is that you can't eat pre-tax returns. So you really want to be mindful of both sides of what you're doing when you're buying and selling. So I think it's a pretty safe bet. You could make that when you see a down 600-point Dow, we're not counseling clients as to why we should take less risk. What we're doing is making sure our allocations are where they belong. Where there are tax loss harvesting opportunities, we take them. And we're paying as little attention as possible to things like an Evergrande restructuring, which is totally irrelevant in our clients' lives. So I think the best way to think about the opportunities that have been granted to us this week are to say, if you weren't a panic seller over the last few days, you don't have to be a panic buyer today. And that continues to be the way that we think about these types of moves.